The Reserve Bank says interest rates are on hold, but inflation is an increasing concern. Also today, why there's more banknotes in circulation, even though people aren't using them, Google's big spend, and Joe Biden and Xi Jinping meet in a 3-hour virtual summit. It's Wednesday, the 17th of November, 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael.
And immediately after the podcast, stay listening for Sean's chat to Jane Shoemake from fund manager Janice Henderson about the extraordinary rebound in dividends from Australian companies. It's a good one for investors, this one. But first, Sean, as I mentioned, Reserve Bank Governor Philip Lowe yesterday said the nation's economic recovery was on track thanks in part to its very low interest rate policy. But he seems determined to wait and see on interest rates.
He sure does. Dr. Lowe said the economy was making better than expected progress towards the central bank's inflation target, but there's still a way to go. While underlying inflation has returned to the bank's target range for the first time in 6 years, it's still at the bottom end of the range, Dr. Lowe said. He said the current bout of inflation around the world was likely to be temporary and price rises are likely to be much lower next year. Governor Lowe acknowledged that an unexpectedly high level of global inflation and a faster economic rebound in Australia could lead to interest rates rising sooner than 2024, but he added that it was possible that progress could be slower than expected, which would result in the cash rate staying lower for longer. The governor is incredibly confident about the medium-term prospects of Australia, that's how he put it, incredibly confident, and said the main reason why many market economists and he disagreed was all about wages growth. He reiterated what he said a week ago. The latest data and forecasts do not warrant an increase in the cash rate next year. Things would have to turn out very differently for that to change. He was speaking after the minutes of the Reserve Bank board meeting of 2 weeks ago were released. They showed that the board decided to abandon yield targeting because prices were rising quicker than anticipated. That backs up what Dr. Lowe was saying yesterday. Inflation is something they're just paying that little bit more attention to at the moment.
All right, what's the bottom line in all this?
Well, the Reserve Bank doesn't want to lift interest rates next year and isn't convinced it will have to do so in 2023. It's a bit surprised by the current bout of inflation, but not overly concerned. That means variable mortgage rates should remain low for a couple of years. That should help house prices. It also means investors won't get great returns by putting their money into the banks, and that will do no harm to equity markets.
And speaking of equity markets, how did everything go yesterday?
Well, the S&P ASX 200 finished down 0.7% yesterday. It was a broad-based sell-off, Michael, led by the materials sector and the banks. Only the technology sub-index made ground. Almost three-quarters of the top 200 companies finished the day below where they started. Some of the notables, BHP was down 2.6% and James Hardie Industries was off 2.3%. Telstra was another big decliner. All the major banks and Macquarie Group were lower. Among the large caps, the best performer was Afterpay, up 1.7%, while ASX and Transurban Group both finished more than 1% higher.
And what about overseas? What's happened overnight?
Wall Street jumped after retail sales in the United States rose by their most since March. The figure came as retail giants Walmart and Home Depot both posted better than expected quarterly results. Even though inflation is feeding through the economy, shoppers are still buying. There was also strong data around factory output and home building. In early afternoon trading, the Dow Jones Industrial Average, the S&P 500 and the Nasdaq were all around 0.6% higher. European markets were generally stronger, though London's FTSE was down. The Aussie dollar is trading around 73 US cents. And Bitcoin had a rough night, at one point falling by as much as 8%. Before recovering some of the losses, it's currently trading at just over $60,000 US a unit.
We'll be back in a moment with the rest of the day's business news. Sean, this is a bit of an intriguing one, and I'm hoping you can explain it to me. Why there are growing amounts of cash in the economy, yet people aren't using cash to pay for things anymore?
Yes, very good question, Michael. The Reserve Bank is considering how it handles and distributes cash, and yesterday put out a discussion paper on the issue. The total value of Australian banknotes has doubled in the past decade and is up 20% since the beginning of last year. The reason? People are hoarding cash, worried about the future. but they're not using it as much to transact. People would rather hold on to real money, paper notes, rather than put it in banks. Now, part of this reflects very low interest rates. Putting money into the bank at the moment isn't going to reward a saver very much, but there's other reasons as well. People value cash because it's private. There's not a record of it. Also, it's widely accepted. It's more helpful in budgeting, and it's more helpful when making payments to family and friends. This is all according to the Reserve Bank. So we have this situation, Michael, where there's less cash circulating in the economy, but there's actually more under the bed, so to speak. The value of Australian banknotes in circulation totaled $100 billion last month. As a percent of GDP, the value of currency in circulation reached a historic high in the March quarter this year at about 4.8%. Who would have thought in 2021 the number of banknotes out there was at a record high?
I just find this entirely extraordinary that it's something as low-tech as people stashing cash away. How much money is actually under the bed then?
Well, the Reserve Bank estimates that about half to three-quarters of banknotes in circulation are hoarded.
Wow.
That's somewhere between $50 and $75 billion in cash, probably in people's houses, really. Now, not surprisingly, given the amounts the bank is talking about, demand for low-value notes, $5, $10, $20, has been subdued. Around 73% of banknotes in circulation, that's just the absolute number, are either 50s or $100 notes. It's pretty incredible, and this lack of cash circulating in the economy has flow-on effects. The Reserve Bank has suggested that industry consolidation among the main cash transit players may end up being necessary because people just aren't moving cash around.
Sean, I'm getting in early and reserving this for my most remarkable story of the week for our Saturday show.
That's a fair call.
Now, moving on from cash, the country hit a landmark yesterday in terms of the COVID rollout.
It did. The vaccination rate of adults over the age of 16 in every state and territory is now at least 70%. The laggards, Queensland, the Northern Territory and Western Australia, are now past that threshold, so hopefully more restrictions will begin to lift. The ACT and New South Wales lead the way with vaccination rates now at 95% and 91%. Incredible. Nationally, Australia is 83.2% fully vaccinated. Michael, in terms of cases yesterday, Victoria recorded 797 cases and 8 deaths. New South Wales recorded 212 cases and 2 deaths, and there were 12 cases in the ACT. There's also concerns around an outbreak in the Northern Territory. 9 people who are in the community have tested positive. All are Indigenous Australians.
Yeah, that's not good news. Now, Sean, this next story is very Financial Review. It's about investment spruiker James Morwinny, who created the Mayfair 101 Group, which fizzled and investors' money was frozen.
Yes, Michael, the corporate regulator has accused Mr. Morwinny of raising funds in breach of court orders. The 37-year-old has been sued in the federal court with the Australian Securities and Investments Commission, accusing him of contempt. Now, as you say, Michael, this is very Financial Review, and to its credit, the media group has done a great job following the ins and outs of Mr. Morwinny. He hit the headlines in 2019 when Mayfair, his organisation, bought Dunk Island off the Queensland coast. Mayfair had also backed ventures from a restaurant payments app to a mobile laundry service, raising funds via old-style seminars and B-grade celebrities, highlighting the venture on Instagram. Now, Mayfair had assured investors, including retirees, that their savings were being invested safely and its products were an alternate to bank deposits. Clearly, they weren't, and Mr. Morwinny in April this year was banned for 20 years from raising funds through financial products. He's appealed the decision and previously has maintained any activities he's undertaking now were taken subject to legal advice to ensure he was complying with the law. The moral of this story, Michael, make sure you know exactly what you're investing in.
Yep, very good advice. Now, Sean, Google is going to spend $1 billion in Australia over the next 5 years on a range of projects and could potentially create as many as 28,000 new jobs. Now, the thing that I find pretty interesting was even the Prime Minister was at the launch of this. It seems everyone's friends now.
Yes, times have certainly changed. The Morrison government, let's face it, has had a fairly acrimonious relationship with big technology companies, including with Google, who threatened to withdraw its search engine at one point. But obviously, relations are improving. Google said it will work with the science agency CSIRO and Australian universities to fund projects of national interest. including the reduction of the crown of thorns starfish in the Great Barrier Reef. Now, Google will provide the technical grunt, such as cloud computing resources and artificial intelligence. It will also build a research hub within Google's Sydney headquarters. That's where all those jobs might be created. Now, Google global boss Sundar Pichai attended the event virtually and said the program would help the development of Australia's digital infrastructure focused on cloud computing. Mr. Morrison was there, as you mentioned. He said Google's investment was a $1 billion vote of confidence in the Australian economy, saying technology was now Australia's third largest sector behind mining and financial services. But he did what Mr. Morrison always does. He drops Sundar Pichai's name. He mentioned that he and Sundar had been discussing the future of Australian technology. He does it all the time. It's quite irritating.
All right, Sean, what's making headlines in today's news media?
Well, several media outlets are saying that Prime Minister Scott Morrison will today ask governments, universities and industry to target 9 priority technologies to help boost Australia's weapons and cyber capabilities. They include drones, genetic engineering, cybersecurity and advanced 5G and 6G communications. And the Financial Review is reporting that federal Labor, if elected, will shelve plans to privatise the national broadband network and instead invest $2.4 billion to ensure 1.5 million more premises receive a full fibre service by 2025.
Running through some of the other stories around today, Westpac has paid a $344,000 contrition payment after it underpaid thousands of workers a total of $6 million. The bank has entered an enforceable undertaking with the Fair Work Ombudsman and is back paying $6 million in wages, superannuation and interest to 6,400 current and former employees. Payroll system errors were to blame for this one.
A National Australia Bank survey of superannuation funds has found that more of members' money is heading into overseas assets. And soon, at least 50% of local retirement savings money will be invested offshore. Already more super money is invested in overseas equities than on the ASX. Now, the reasons include better opportunities for returns and diversity considerations.
Best and Less has warned it will miss its interim revenue and profit forecast following extensive lockdowns just 4 months after the budget clothing retailer listed. Chief Executive Rodney Orrick said the retailer was experiencing consumer behaviour that was out of step with normal patterns and that as Best and Less wasn't considered an essential retailer, it couldn't remain open through the enforced lockdowns. Not a good look to downgrade so soon after listing, though.
It certainly isn't. It's only been on the bourse for about 4 months. Meanwhile, Woodside Petroleum's chief financial officer has stepped down just as the oil and gas giant looks to merge with BHP Petroleum. Sherry Dew is taking up the CFO gig at Newcrest. It's not a good look just before a merger for the main numbers person to leave.
No, not the best timing. And Sean, the Australian Federal Police executed a search warrant on Everblue's Sydney offices. Officers were spotted looking through files as part of an ASIC investigation. Now, Everblue is a broker at the smaller end of the Australian equities market, trading shares, and provides trade execution and advisory services to Australian and international retail, wholesale, and institutional clients. So something to watch there. What's the key overseas news this morning?
Well, the big one is a meeting between US President Joe Biden and Chinese leader Xi Jinping. They met last night and emphasised the need for cooperation in their first face-to-face summit, which actually went much longer than expected. They chatted for over 3 hours. The video hookup covered a range of topics from Taiwan and human rights through to trade. While there was no specific breakthrough on disagreements, the atmosphere was described as respectful and open, and Mr. Xi called the US China's old friend. Now, Chinese media reported that Mr. Xi told Mr. Biden he hoped he would return US policy towards China back to a rational and pragmatic path, adding that the world was big enough for both superpowers. It certainly is a start. On to other overseas news. Royal Dutch Shell is Dutch no more. The company said it will overhaul its legal and tax structure and walk away from the Netherlands amid deteriorating relations with what's been its home country for a century. Top executives will move from The Hague to London. The Dutch government immediately said it was unpleasantly surprised by the announcement. It's a bit of a Trojan horse, though, for the FTSE. The preponderance of fossil fuel companies has always weighed on the London bourse, and this is another big emitter settling on the London Exchange. And finally, there's been a rush for private jets. The patchy scheduling of commercial flights has triggered a surge in private flights. More than 4.2 million private jet flights have taken place this year, with a record number in each of the past 6 months, according to aviation data provider WingX. I'm thinking about it, Michael, but maybe not just yet.
Yeah, me too. You know, this is one of the main reasons why I buy lottery tickets, which is not a good thing to admit on a business podcast, is it?
No, probably not. I'm working my way towards it. I'm not buying lottery tickets.
And let's see who gets there first. All right, up next is the Daily Interview. And today, Sean, you're talking to Jane Shoemaker from Janus Henderson.
Yes, Janus Henderson is a massive global fund manager. We talked about dividends and why Australian companies pay such high dividends and how they've rebounded so much since the pandemic. Really good chat if you're an investor.
Yeah, it's pretty extraordinary, especially with the global comparison. Australia seems to be really outperforming. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you very much, Sean.
Thank you, Michael.
It's Wednesday, the 17th of November, 2021. Make sure you're following the podcast. Join us online on LinkedIn, Twitter, and Facebook, and head to fearandgreed.com.au to sign up for our free daily newsletter. I'm Michael Thompson, and that was Fear and Greed. Have a great day.